All right, let's jump into it. Where we at? 11:52 on Saturday, the 5th of April. So wow, what a week, what a week, what a week. These were some of the most hectic moves. Look, anybody that knows anything knows that this is yeah, an incredible time to sort of be trading. And I mean, this is what I was saying. This is what trading is about. Sort of like these kind of moves here. Well, I don't know if this is what trading's about necessarily, but these are the sort of hectic times where, you can either make a bank or you can get absolutely whipped out. So it's very tough to sort of navigate these things. It's not just one market, is absolutely everything falling apart. And I have to preface this whole thing by saying that I 100% underestimated this Liberation Day. I really thought this was going to be, oh, you know what, we know the tariffs are coming. We've heard about this kind of thing. Impact will only be so. So, wow, it absolutely decimated things. Not only just as it was coming out, of course, when we sort of watched it the other morning and the boards, when the board came out and the market flipped in seconds, I was seeing things like, I think they said 1.4, $1.7 trillion or something wiped off in like 4 minutes or something ridiculous like this. That was obviously just equity markets and that, so not even including the other ones. And then it's funny, and then they talk about the ASX, and it's like 90 billion knocked off, which is obviously an insane amount of money, but it just it goes to show how rinky-dink our little market is compared to what the US is sort of looking at. So everything getting absolutely demolished or flying to the moon, depending what way you're trading things. So it's kind of like, where do we start? And I think sort of gold is a good place because this is one of the trades that I actually nailed. I was shorting gold as probably all throughout the week up in here in the 50s. Biggest sort of buck moves. I sort of got out first lot down at 66. I got the second lot out. I don't know, somewhere down. No, I wasn't quite into the 40s. It was a $100 move to the bottom side though. So as I said, that was the first time I've really hit those kind of numbers, which is insane. Just wish I had a monster position on that one. The position wasn't too bad, and of course, a $100 move is a $100 move. That is insane, and particularly because it came so quickly. It was just a crazy, crazy sort of trade in that. So look, we had the three drive. All this stuff was called out throughout the week. I did a video, separate video on gold when we were at sort of, I think, up in the 50s, 150s, 140s. It was around this point just here, laying out my sort of thesis and reasoning for a potential move towards 2900. Um, there's a video there for it. It's only about 5 minutes. Goes through, outlines it beautifully. Couple of things in the more short term. This was this big negative divergence with a three drive. Now, negative divergence is my bread and butter, and they're the ones that I look for, the ones that I love, the ones that I have the best sort of hit ratio with. When you can combine those things with another technical setup, so obviously in this one we had the wedge. Sorry, we have the wedge. No, I got ahead of myself. We had the three drive here, similar with silver. I'll get to silver in a moment though, because this was obviously just an insane. Wow, I left a lot on the table with this one. Um, Negative divergence into the top of the wedge. The combination of the two um, is really where you can sort of make some great moves and great sort of reactions. Whoops, let's go back onto gold. So that played out very well in that. And this is the beauty of doing these videos and these analysis and that, not only just sort of putting charts up and things sort of throughout the week. And I was saying to a mate, look, you know what, I'm up here and I'm sort of doing a video saying that gold's going to go to 2900 when it's like, a sniff off all-time highs. There's always still that sort of thought of like, even after sort of doing this for so long, there's this thought of like, yeah, look, are you just crazy? Like, you're going to look like an idiot here. That lasts for about a second, then I go, whatever, I don't really give a shit because that's my analysis. There was reasoning behind it. There was a fundamental reason. There was a sort of technical reason, number of technical reasons. So, you know what I mean? You just got to put yourself out there with these things. But certainly, look, this paid off and sort of silver, they were the two biggest trades for me for the week. They were just monster trades. So, yeah, look, let's just get on with it. This is with gold, three drive to the top. it had this first little breakdown and this bounce. This is one I sort of covered yesterday in the video, and that this was like an $80 bounce that it just came straight back up here. This was like, okay, blah, blah, blah. As I said, I closed some down at 66, comes all the way back up here. I added in, actually got back in, a couple of times on the way up through here. I'm like, oh my God, have I just given it all back kind of thing as it sort of moves back up through here? Obviously, just took snippets back into the normal sort of style of trading for me, where I'm taking little bits and pieces. I did hold some from around this area here. I can't remember exactly. And then sort of like I sort of again came back up here. So it actually sort of went nice profit into drawdown. Fuck this, and then it just bang dropped through. And then the second time down here, I took out this little part here just through this window here. So yeah, the trades were just crazy. Like, it's to see these things move as much as this is just, yeah, I mean, and this is why I say this is what trading is about, because you know what I mean. Like, if you can analyze these things, if you can execute these things, this is where you make good money, short amount of time and that, but you got to be cutthroat. And you know what I mean. I talk about a lot of the good trades. One of the bad trades I did, Aussie. Buy zone? Yeah, I don't bloody think so. This was the fucking, I mean, Jesus. Look, I'm chopping all around all the charts. It's just because we had so much. Aussie yesterday, 5%. If you take it from the highs, this was like Friday night. That's 12 o'clock, that candle there, 6%. You know what I mean? Like, I avoided these buy zone. I caught the buy zone here, but I sort of jumped out too quick. Avoided this one, and then sort of like, yeah, here we go, second chance down the bottom here. Wow, that one I got wiped on. So look, it's the good and the bad, and that you got to take them all. And I'll cover Aussie in a moment because I've got a bit to unpack on that, just in terms of how I got it wrong as well. Because again, this is the best. This is look, mainly these things are done for myself and that, and for anybody that sort of I know, so I can sort of send it on to them. But the the thing is that it's sort of like this is analysis. This is looking at the market, making a call, and then going back and then reviewing it and say, wow, yeah, you know what? I nailed that. This one, I nailed. Silver, I nailed. Aussie, I got wiped. And it's funny because I watch these things back, like sort of, like I sort of, the footballers sort of watch a game back and they sort of study the moves. I can see my analysis from yesterday where I talk about Aussie and talk about Aussie in relation to Euro Aussie in relation to sort of New Zealand Aussie, that copper was coming down, equities were coming down, and I still took a long. It's just like, come on, bro, like, is this your first day? So yeah, look, it doesn't matter. You can nail these things and absolutely sort of kick it out of the park, and then sometimes you can just do something that makes you look like this is your first day trading, and you're like, what? But anyway, whatever. The point is, take the bank where you can, don't get wiped out. We got through the week. I mean, I think anything that you're sort of up on the week for is positive at the moment. Like, this is just insane kind of stuff happening here. So anyway, enough of all that. On with it all. What can we expect now? Look, gold, a couple of things here. I don't think we're going to see this as eventuate into a third drive. I don't think we're going to be seeing it whip back up over here. Look, given the actions and the moves that we've been seeing through this week, anything could be happening. You could see this be a base and come up here. This was an area I sort of did in one of the videos, and I said, look, this is where we'd be targeting. And as you can see, it came down, filled it, boom, and that was enough for it. It moved up into the end. You're still not seeing any sort of particular sort of buying, like, buying still sort of coming down towards the end. It was picking up a little bit through here, but, it's what is it, hitting at 27 or so. So the RSI is not saying, okay, yep, was sort of big negative divergence or anything. Had this sort of been a bit more, like, had the sort of RSI been like this, like that, sort of through this, with this high here being a big high or low like that, then you could be saying, okay, hold on, wait, this is coming down, but the buying pressure is building. We could be seeing a reversal. It's not. So, this is the way to sort of try and unpack these things twofold in that sort of back and forth. That's it. So, I just got a message from mate. So, yeah, look, I don't think this is necessarily going to be the bottom and we go back up now. I mean, look, let's see what happens with in terms of news and data and that over the weekends. What I could potentially sort of see is maybe a move up to around this sort of 30-50 area. I did another one of these the other day, and I was like, oh, like again, sometimes when these things are so incredibly bullish, like you don't have to be the first one to the trade, but this was a chart that I sort of did to sort of say that this could be a potential move that we see once it. All right, back on with it all. Um, yeah, so this was another thing that I was thinking, like it would come back down here. So look, this is just something to keep in mind. Look, we have seen the high on the way up here. It does line up to what it would have been. Look, typically, if you were going to see a sort of head and shoulders like this, you'd probably, I don't know, there's probably some sort of thing to sort of say that it'd be a bit more in line with it all. There's no real sort of, sort of hard and fast rule as far as I'm aware, to sort of say sort of how high these things have to come and that. The only things are sort of like if it goes high and then high again, or if this shoulder breaks the head kind of thing. Because really what you're sort of seeing is a level of sort of sellers. Whoops, level of sellers here. We lost the internet again. No, maybe not. I don't know. The internet issues all week this week. And I think we might have. Anyway, look, the point's still the same just for the moment. I'll have to sort of pause this and get back into it if this dies. You've got sellers here, and then sellers move down here. So if the pressure is applied from selling here to then come up and say retest the underside of these wicks and these body fills over here, and then we see sellers step in from 30.50, that's your main level that you're looking for. If we see it push up and we see sellers step in and then try and really jam it down under 3K, that's when you're looking for your sort of move. And with this move here, it also takes you, as you can see, just can't copy these things, back down underneath 2,900. Now, these again, they're big calls with it all. This is that little channel that we sort of had a bit of a breakaway from. This is one that I sort of picked up and sort of referenced in that sort of separate gold analysis video the other day. So this is an area that I'd really sort of be targeting, sub 2,900. As I said, that's $250 move from the highs over here. But like I've said a couple of times, and you can see this move down here, that's a 10% correction. It sounds insane, but when you sort of look at what we've had this week, we've had silver correct, I don't know, 15% or so. Copper has come right off. All right, I've lost internet. I'm going to have to come back in 2 secs. Okay, and we're back. So yeah, kind of lost the sort of train of thought there. Sort of how Saturday morning sort of changed that. I sort of clean the kitchen and do the analysis. All right, so yeah, look, as I was saying, the potential for this kind of sort of setup to thing. I'm not married to this; it's just a potential, and these are the kind of things you need to sort of be looking for. This kind of setup, as well, as you can see, look, it takes us to this little breakaway channel, and you got to look at these things in context, right? So again, this is what I sort of covered on that sort of video. Our main channel that we've been respecting since way back in sort of December 23, we're in overshoot. Well, we were, sorry, in overshoot territory. This was the call. This is a break off channel, which as you can see has sort of come off on a steeper sort of gradient. This thing should still somewhat be respected. And this is why we could see potentially a move up to test for a sort of right shoulder, and then we come back down here. But if we do this, if we sort of get up to that sort of 30-50 area, and then we come back down here, this is going to be a very, very crucial line, in my opinion, because this, at this point, will be giving you a confluence of this new breakaway channel, which we've respected up the top over here. So we can see this is pretty much a confirmed channel. But if we get to the break here, that's what we're kind of looking for. And as we saw a second ago, the measured move of this, not including the wicks at the top, takes you back down 28.85, sub 29. So look, a lot of things are kind of lining up for this now. Obviously, we still got to have this sort of little portion of a breakout, But certainly if we get this break underneath 3,000 on a second push down, look, this thing could just melt straight down. It could sort of shoot straight back up. But I would say that most likely at best, if it is going to go back up, it's going to sort of consolidate around the lows here. This is quite an ugly sell-off, and they tried to bounce it back up. RSI is set to sort of continue this for a little bit more of a sort of sell down. So we could be in for a little bit more downside with gold, in my opinion. But this is just a thing that I'm sort of going to be watching for sort of come the new week. But the analysis from 31.46, I think it was at the time. It's 100. It went 100 and was $130 from that in 2 days. So that was a very, very sort of a good call. I'll give myself a pat on the back for that one. Silver, if we're sort of staying on the ones which I call very well, was this absolute meltdown of a trade. Now, I took out my last part here at 31. I was like, look, no, this is where we are. It broke this main trend here, and this is one that I was sort of covering yesterday, well, it's the last couple of days. I think originally the call was done around sort of 34. I executed around sort of 34, 33.80s around this point here, and this just dropped down. And as we can see, this is insane. So this is a 15.57% drop. That's $5 or $5.40 almost in 1 week. Because this here is last Friday, and this is where we are here. Well, obviously up a little bit here, but it got absolutely, it gave up the whole year. Like this trend is a yearly trend. This goes back, as you can see, December 31st, January 1 here. It gave up the whole year in 2 days. I always use the sort of joke that market's favorite pastime is selling Aussie, and there's a dude that I know who said like that the silver people will sort of argue that point, and when you see moves like this, oh yes, you definitely can see that. Like if you were long on this thing, and a lot of people were, remember, I mean we were very bullish, we were moving all the way back up here, come all the way back up to the top over here. Didn't quite get there, and then bang. But negative divergence into a wedge, the combination of the two on the high time. This is on a daily, so it's on the high time frame. Those are the things you got to look out for. Look, I mean, honestly, this is probably one of the best trades that I've done. I executed beautifully. The analysis was spot on. No hindsight trading here. Like my analysis are out there every day, and I put the charts up as well to sort of back these things up. So I try to gauge these things afterwards and sort of like I give myself a bit of a out of 10, out of 10, out of 10 score. So it's out of 10 for analysis because anyone can analyze. Oh, yeah, silver's going to 29. Sure it is, mate. Sure it is. Well, have you got anything to back it up? Did you take the trade? You know what I mean? Like it's oh yeah, I said it was going to go to that. Well, that's great. Did you execute? That's the big one because anybody can have an analysis and say yeah this is going to happen whatever, but so analysis was 10 out of 10. Execution here it's 33.80s 34 10 out of 10. Management, I'm going to give myself like a 9 because I did hold it. The last part I had four entries, held the last one down through to price target 31, left a considerable chunk on the table though. So, that could have been better had I just had to continue to hold. I needed to close that out actually at the time, unfortunately. So I would have liked to have just held that because, you're just so protected. And this is the thing, I'm a short-term trader. I'm in and out. I mean, I've spoken to people and they're like, how many trades a week do you take? It depends how you sort of cut these things up. Like you can say, yeah, so I take 50 trades or something like this. I had a look the other day. I think it's an average of 11 trades a day. But the thing is, it's not 11 different, analysis. It's sort of like peppered entries and, in, out, in, out, in, out, in, out kind of thing. So holding things all the way through is not really my sort of forte. But, when this thing moved, as I said, this is the trade that I sort of took from down here. That's an 8% trade in 2 days. Like, I'm sorry, but that's management for me. I think that's a 9. Yeah, cool. If you'd held it, it would have been another sort of, another couple of 100 points or something. But the point is, like they say, there's a good saying that sort of like, bulls can make money, bears can make money, pigs get slaughtered. Don't be a greedy pig. And 8% in 2 sessions, That's good enough for me and shit. So yeah, it could have been holding, could have done a lot more. Great, whatever. If somebody else held that and executed like that, good on them. But that's probably one of the best trades I reckon I've ever taken. All right, anyway, enough of sort of patting myself on the back. Let's look at what we're sort of looking at now. These candles are very big, yeah, stating the obvious. The thing is with these, it's sort of like, obviously, yes, okay, this is a complete meltdown. We've seen all this stuff happen. The thing that can turn these markets around, particularly for, say, silver and copper, the more manufacturing metals, gold's running off a different sort of set of steam at the moment, are headlines, and mainly sort of probably from China because the last nail in the coffin for these things was China's retaliatory or retaliation in tariffs. They said, look, we're going to whack a 34% back on you. And this is what the market's been fearing. It's been fearing this idea that we're going to enter into another large trade war with the two largest economies. Everybody seems to be going into protectionism. They're not sort of like going, okay, let's continue with the free trades and all this kind of stuff. So this is why we're seeing particularly manufacturing metals, and this is what I covered yesterday with copper particularly, and also obviously silver because it's wearing its manufacturing hat at the moment, that these things were going to take a hit. Because it's not so much that, okay, yeah, tariffs, people are going to pay more and all this stuff. Production will slow down. And when production slows down, that'll slow down because sales will slow down. Sales and production slow down, demand drops. If demand drops, well, I've got all this silver, I've got to get rid of it. Nobody wants to buy it. How about you take it for 32? No. How about you take it for 31? No. How about you take it for 29? This is why. And then eventually it'll hit a point and people go, yeah, it's pretty good. Yeah, I think silver's all right at that price. I'll buy a bit more. This won't last forever. And so what I'm thinking is, not thinking necessarily, but, contemplating, as I do with these sort of weekend analysis, is that if we get some sort of headline and, I don't think America's about to back down, but I think if we saw Vietnam be the first country to go to America and say, hey, look, we're going to drop our tariffs with you. So it could be the start of something. I'll cover Aussie in a moment because that was moving a lot around the time that these headlines were coming out. And as soon as they said, hey, look, we're going to sort of like it shows that some countries are willing to compromise. Obviously, China have just said, screw you. And look, they're bigger than Vietnam. They can say that. They're not there to be necessarily bullied and pushed around. They've got to come out a little bit hard. It's in their nature as well. But the point is that sort of like if we do see something of an easing in that regard, I think we could see a snapback. Do I think we're coming back up here? No, I don't. I don't think that that's the case. I think that this is probably going to be a long-term high for a while. You're at the risk of a very big double top here. Look, I don't think this is going to be the case, but again, you need to consider all this thing, and this is a point of analysis, and that we lost fucking internet again, Jesus. Look, I'll do the best I can, but I can't even move the charts now. Moving this way. Anyway, a double top here. So what are we looking at? 34.80 down to 28. I mean, look, again, I don't think this is going to happen, but should that be a double top? Should you break through the yearly lows of 28? Technically, that could be seen as a double top, which would give you a measured move down to like 22. Look, I mean, last week we were at 34, now we're at 29. A lot of people didn't see that ever happening. A lot of people were like, yep, 36, 37, 40s, $50, all these kind of things. And, a lot of people got humbled on this sort of stuff. As I said, I got smacked on Aussie and shit because I read it wrong with it all. But so the point I'm getting to is that these things can happen. And when you don't think they're going to happen, that's when they're definitely going to absolutely happen. So I wouldn't be looking to buy these things first off. I reckon the two trades that we have here are potentially for this yearly low to hold. Okay, now we've completely lost internet. All right, we'll be back. All right, and we're back. This internet is absolutely ridiculous. Anyway, so yeah, I can't remember where we're at there. So look, let's go. Silver through the yearly trend. This is something that's very damaging here. This is the point where we kind of like I put a chart up there saying, look, we'd taken out this wick low. You'd had a big candle, wick low, horizontal. You got the sort of rising spot. There was a big confluence for it to have to hold here. It didn't, and we can see the resulting action. So look, this thing's not going to come straight back up like this over here, though these moves can't last forever. And remember, a lot of people have been sort of liquidated, a lot of people have been wiped out through these moves. So I would say, potentially we're sort of looking within the last buck of a bottom of here, like this bottom from January is going to hold. That's going to be a target for shorts. It's going to be where people sort of thought, hey, look, we started the year here, it's going to buy here. It doesn't mean it's going to hold forever, but it will see a reaction. So should we come down early, that'll be the move, I reckon. And I do think we'll see some reprieve. There'll be some headlines to sort of justify this. It'll just be, it makes these people look like they really know what's going on. But, really, it's just sort of like a perfectly timed headline coming out that suits the people's positions. But that's the point of the game. These people are moving the market. We're there to sort of just find out what they're doing, when they're doing it, and piggyback off the back of it. We're not moving the market ourselves, but we're sort of just, trading as they sort of do. So if we see a move down early into sort of 28.90, look, I'm very reluctant to step in front of this. I would like to see a couple of failed attempts. I think to be the smartest you can be about this is to sort of say, okay, look, it comes down here, tests once, tests twice, pick a high, and then go. So, back up above, say, 30, that may be a sort of a much safer bet. Yeah, you miss a buck move down here, but you certainly can target up towards 30, 31 or so. That is where I think the trade potentially could be taking us. I think we could be seeing this move down, find support, find resistance, and then tackle here. Two trades to take out of this would be this move here or a rejection from up around here. And I do think that this is here, and I think there's a chance that we are potentially going lower. If we test yearly opens, I think that's going to sort of see some sort of reaction without a doubt, but it doesn't mean it's going to hold. And I think you need to honor the fact that this thing has come down, and that is just not, this is on 4-hour candles. They've just not sort of picked up this once. But again, these moves won't last forever. And the snapback will be quite quick, but then I imagine we're probably going to see probably lower. So I'd be looking mid-20s potentially for silver moving forward. If we have a look at a fib, say it does come in. This is a bit of forward thinking here. Say it does come down, test those opens. It's down. 38% retracement lines up pretty well with those lows where we had that price target to then see a move back down. And again, this is the same thing I say every time. Double bottom, higher low, lower low. I think we'll probably go lower low. But should we get a move up into sort of 31, I think this is a time where you could see some good sell opportunities to get this trade to sort of come back down here to see if we can push that down into the 28s. On metals as well, just after doing sort of gold and silver, this is gold-silver ratio. If you want some sort of explanation of why this is being absolutely decimated, look at this. I cover this sort of intermittently through these videos, but as you can see, I trade this a lot. I don't trade it. I use it as a sort of barometer and a reference a lot. We have absolutely exploded. We were in this 3-month consolidation, 5% up, down, up, down, up, down. This again was one of my, I know I seem like I'm patting myself on the back for a lot of these calls, but this is the point of doing these analysis, doing it daily, doing it weekly, and just never missing a point, is that you can go back, you can look at these things, you can review the good ones, you can review the bad ones. This was the call that I made with the negative divergence through this thing, and I said, this is the move that we start to see. And I said at the time specifically because the way that you trade channels and the way that you trade these kind of areas, it's in a range, bottom, top, bottom, top, bottom, top. Once it starts to break this pattern, once we start to see, hold on, wait, this has hit the bottom, it's hit the top, it should hit the bottom now. We saw the buyers move from here. We saw the buyers move here, and I said, look, if these buyers break at the top up here, well, actually, I called it here. I said, we're going up to the top. If these buyers hold here, we're going to see a move. And that's gone up and up and up. I thought this would be the price target, 95. And it went up, I thought this would be the price target, 101, 100, 101. This thing is absolutely just going bonkers. If you go into a weekly time frame to get the perspective of this, that's the move that we're seeing. And this is the power of a consolidation. 3 months in 5%. I said to a mate as well, we was in the middle, I'm like, when this thing breaks, it's going to go bonkers, mate. And it had. That is just a mammoth week. And look, to be honest, this may not be done. I mean, this is probably the next level you're kind of looking towards. should this thing sort of continue a little bit. We could be moving up to 113. Quite frankly, these are kind of little levels that I'll be looking at. So let's take the lows from here, a little body fill here, because there's a tiny little range through this point here. 108, 110, and then 113. That's insane. Look, this, I would say sort of what I'd probably be looking for with this is a little bit of a pullback through here, where you see a bit of a reprieve of silver, and then a move up over here. If we see this move come through here like this, then I could see silver back down mid-20s. And I think that's a possibility. I mean, you got to honor the fact that this thing broke out and it's still up near the top. And remember, gold-silver ratio, it's typically in a sort of bull market for metals, precious metals, you're going to be seeing silver outperform. Well, silver will outperform whether it's good or bad, but typically silver will outperform in a bull market. So while this chart is moving in a downward direction, you'll typically see silver doing a lot better than gold. And the same is true in the opposite direction, the vice versa sort of thing. So as we see, this goes up here. Silver just came down 15% in 1 week. That is something insane. It closed near the lows. This closed near the highs. I don't think this move is done. I could see a little bit of reprieve, but should we see a pullback, should we see a retest of these levels and then a subsequent higher high, I could see silver definitely going down to mid-20s. And it's something to definitely sort of be aware of, because we're hitting sort of like, levels of sort of, 2020, like COVID periods, which are, COVID's renowned as sort of like, up there with like, the GFC, with the tech bubble crash. What we just saw this week was something that will be talked about for a very long time. Like, this is a massive, massive thing. And I think a lot of people probably, and as I said, look, initially with the actual idea of this Liberation Day, I underestimated this thing. But certainly I reacted to it as best I could. But the point is that, you got to understand that these moves may not be done yet. Just because we've had these mammoth moves doesn't mean that the market's gone, yep, okay, we've found a nice sort of equilibrium and everything's equal and happy now. So should we see a little bit of a pullback? I think those will be the times to reload to look for a second run. But certainly if we see a pullback and a higher high through here, I'd be looking up around 108 to 110 to 113, which to me is just insane kind of levels. But yeah, we'll see how we go. All right, so move along. We've got so DXY obviously got creamed in that, hit that price target that I've been sort of looking at. Let's get back onto a decent time frame we can look at. Yeah, can't really see much on this one here, but this was the head and shoulders call from back in January. We're at 106. We hit price target this week. So let's just zoom in on this a little bit. Price target hit here. I thought we might have consolidated here. We did for a moment, but obviously sort of finished up a little bit on the stronger foot. But this is giving us some pretty good stuff we can look at. So price target hit and market agreed. And this is what I'm talking about, sort of like you don't need to be the first into the trade, because you can see this actually hit it almost to the cent, which we're talking a 2-month call that I made on this. And it hits it to the cent and the market reacts. This is the power of the measured move, because you're not the only one looking. Like, there's a lot of people that are actually moving these markets, have got these targets, and they're tried and true tested things. So it's not just one thing to know what a head and shoulders is. It's to know where is it going to take the price. You're going, okay, this is a head and shoulders, that's a neckline. Yeah, great. So what? What are you going to do with it? And this is the point. It sort of hammered down, hit the price target. One test, came down again. Second test, came down again. Shot up. Third test, this one here, the sellers couldn't quite get it back down to there, and we're seeing, boom, subsequent reversal, and it's moved up to the top side. Does it mean the whole move's over? Of course not. But what it does mean is that we see continued move to the top side in this particular move here. So now we're sort of coming back up. We're retesting the bottom side of the supports. This level obviously sort of held, most of March. You know what I mean? And obviously we chopped through. We're in this retest mode here. So I thought this wick might have held, which we got pretty close to it, and obviously you could see the market at a point did sell it down. We overshot that. We're back up into this level here. Now, if this thing sort of rejects a couple of times from here, and as I said, watch out for the headlines, watch out for sort of things to sort of say that, hey, you know what, China's actually going to come to the negotiating table, or, America's agreed to sort of relax the tariffs on China if they relax theirs or anything to this sort of effect. This is going to see the yuan pick up again. It's going to see US dollar sell down, back down. It's going to be something to justify this kind of move coming back down. And I said this on Friday that I don't think, we've hit the price target. I don't think we're about to go through right now. As it had that sort of consolidation period set up down the bottom there, I think that's what I was kind of looking for. It's overshot that a little bit. That's fine. It's still back up in this area. We did leave this gap, remember? So this is something to be aware of. I don't think that's necessarily going to close, but given everything that's happened this week, anything's kind of possible. But should we see this level here, 103, 103.20 in that hold, and we see this drive back down towards the lows, again, I still don't think we're going to break through quite yet. I think eventually we will. There's a bit to unpack with that as well in terms of sort of like, Trump's plan and what he's doing with sort of this and pushing the sort of pushing the Fed towards sort of cutting rates a little bit more, but which ultimately will weaken the US dollar. And I think sort of getting it down to, maybe mid 90s is something that they will do. The whole thing is that they've got incredible amounts of debt. They want to be able to refinance that debt. If they can refinance that debt at a lower rate, it's much better for them. And that's the point. That's sort of like, whereas sort of people think, oh no, they're not going to cut and they're not going to do all this thing and Trump's insane and all this kind of stuff. There is logic to these moves and this sort of stuff that's happening. So he said a number of times, he's made it very clear that he wants lower yields and he wants a weaker US dollar. We are seeing this happen, as you can see on the chart. It tells the story. You're seeing it happen. It's moving back up here at the moment. Should we reject at this period here? I think we move back down towards the lows. And I think that's a bit where we can see a little bit of a reprieve. I think once we see the flows come out of the US dollar, it's got to find a home. I mean, equity markets got absolutely demolished. We saw Aussie got smashed. Euro, I haven't actually followed up where Euro got to, but that thing was absolutely hammering. It got up to 111. So, I think that there could be a little bit of to and fro. Possibility of overshoot to 103.70 to close that gap, but then, maybe a move back down towards 101. But I do believe that this move's going to come. I don't think this is it at the moment. Look, to all things considered, if it goes above 104, which I don't think it's going to do, given everything I've just said, that makes this a failed breakout, and then that means it's going much higher. And if we see that, geez, you're going to see Aussie in the 50s, without a doubt. So yeah, interesting sort of times. What I'll be looking for is some sort of early rejection from around these 103.30, 103.40 areas. Possible overshoot to close that gap. And if we start to move back down here, that's the time to sort of jump into a couple of trades and that to sort of catch that as we start to move back down through this period to potentially come down and test that 101 level again. So I think that's something to look out for. Cool. Let's fly on. Speaking of Aussie, poor little Aussie. Oof, oof. 6.5% in one day. 400 points. I literally don't think I've ever seen this. If you look at that on one candle, that is just insane. I mean, to put it in perspective, you got to go back to March 2020. Jesus. March 2020, when the pandemic started. This is what I'm trying to sort of emphasize with a lot of this stuff, that these kind of moves that we're seeing at the moment are something that's going to be renowned as a very important period through these sort of financial times, because these things are, the market is breaking at the moment. The market is, like, you can see this with the thing, it is breaking. Yeah, look, there's not a lot you can say about Aussie here. That move is just insane. I've never seen anything like this, to be honest. All right, enough of that. It's taken out the lows. Most recent lows is what we're reporting about. Of course, it goes back to sort of Feb or whatever. One interesting sort of thing. This was a move I just, first day when I got back from Europe last year. I remember sort of coming there and I'm like, whoa, geez, blah, 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 blah. This was a massive, massive, massive sell down, and then this is capitulation. This was 150 points this day. So where's the little measure? This is 150 points, 2.5%. Today, 339, twice that. Difference between these 2 days is, though, you can see that they bought this back up very quickly. This, they did not. They closed it near the lows. Yeah, a little bit of reprieve, but as I say every time in that, you don't really take too much stock out of the sort of the last 4 hour candle of the week. You're going to see people sort of take some profits. You're going to see people, not so many people at their desks. So you can't sort of say, hey, look, we had one little bullish candle into close. Well, that's it. So look, I do think we will get a bounce. As I said, I think DXY will sort of reject a little bit. I think the market will sort of continue to sell US dollar down overall. But the thing is with Aussie, it doesn't just work off what the market's doing with DXY, because obviously it's not part of DXY, but it's not just what they're doing with US dollar. You've got to take into account the fact that copper's breaking. You got to take into the fact that account that the equity markets are getting absolutely dumped. These are very strong risk-off events. Aussie is a risk asset. So as it's sort of as we still see these things continue to sell down, Aussie is still going to be under pressure. As I said, if US dollar squeezes and Aussie's already on its legs, you could see 58, 59 cents. Like it's entirely possible. Um, as devastating as it is, that's very much a possibility. So as I said, look, this was one that I definitely sort of stood in front of and I got sort of wiped on. So you don't just pull all the correct things, but if we have a look at these things now and break this down, and at the point, yesterday with the analysis, this was going okay. RBA has now flipped a little bit, seemed to be sort of pricing a whole bunch of sort of cuts to come. China retaliated and they got absolutely demolished with the yuan, and US dollar found its feet and it bounced up a little bit. This is how much can sort of change within one session, a complete 180 on the direction. And we were thinking yesterday that okay, this support here might hold. It was very odd because it was just bucking the trend. We were seeing equities start to come off. We were seeing copper was already sort of coming back down. Aussie was doing weak against all other currencies in that, except for the US dollar, and I thought that might have held. And obviously that was a bum call, and it just absolutely smashed down through there. Anyway, enough of that sort of feeling sorry for ourselves. Where to now? As I said, if I think the market will overall sell US dollar once it gets up to retest those levels, I think we could see a reprieve. It may not be something that's going to take us all the way back up, as I said, same with sort of silver and these kind of things, but it does mean that we could be due for some sort of rebalancing. Levels of 60, 80, I think is going to hold some significance. Should we get above that, then maybe back up to 61, 62 at a max. I think is the kind of limits that we're kind of looking at. I think you got to honor the fact that the market absolutely destroyed this. Look, if the landscape changes and we get those headlines and China says, hey, look, let's play ball, and America says, hey, look, we can sort of reduce tariffs. Oh my God, we've lost internet again. These are the kind of things. All right, actually, no, I can't do this without. All right, here we go. We've got another chart. This internet is killing me. If we see these things sort of headlines come out, we could see a very quick move back up. But if you drag, oh no, we can't even put a bloody fib on this at the moment, can we? If we look down here, what I'll do when I come back, I'll set up some fibs, look at where these bounces could potentially come to. But remember, it's a three steps through the trade. We've got the move down here. It's not going to continue forever. Find its base. It actually hit 59.80s, geez, 59.80s. Find its base, find a sort of support, bounce back up, and then it'll come back down and sort of test to see if we are going to be going down lower and lower. But this little bounce will come. So we'll see how this sort of plays out sort of through the week, see if there's any headlines over the weekend. All right, try again. The internet's back. Okay, so yeah, look, it's very hard to sort of stand in the way of these things, but you got to understand that obviously these moves don't last forever. It's not necessarily going to undo all the way. but there is going to be a trade opportunity through here, and there's going to be a trade opportunity through here. RBA seem to have sort of gone with the idea. Look, we had the RBA rate decision this week, and it was pretty uneventful in the sense that they were highly expected to hold, and they held. What I felt sort of probably gave a little bit of a push up on these sort of things was like everybody was expecting it to be quite a dovish tone. It actually came out quite hawkish sounding, or at least it did to me, and the market seemed to push up in regards to this. So that's something that I did have RBA pointing up, but now they seem to be sort of pricing in X amount of sort of cuts and that sort of. So yeah, we did see sort of it push up on that sort of little bit more of a sort of hawkish tone, but everything you seem to read at the moment now seems to be everybody's like, oh, we've got to cut rates, cut rates, cut rates. If this does eventuate, and we see I wouldn't say sort of a cutting cycle because we're kind of already in a cutting cycle globally. RBA, obviously not. They're a little bit slow to act on both ways. Um, but it feels like we're just going to get a repeat of everything. And, everybody's going to cut. Inflation's going to go back up. Everybody's going to get panicky. Everyone's going to start sort of raising rates again over a 6 month, 8 month period. This is not going to be good for Aussie. You know what I mean? High inflation is going to cause fear. Fear is not going to be good for risk, and Aussie's going to be suffering. So, unfortunately, I do think Aussie is destined to be sort of sitting around. God, you could pull a number out of a hat, 58 to 62. I think this is kind of the area that we're going to be sort of playing with. I had seen calls for this to be a bear flag. I don't think so. I think this is too sharp a drop to sort of just say, hey, look, here it is kicking on. It could be, who knows? But really, we've got to sort of see what happens when it gets back up to test 62. Same sort of thing with the US dollar. If we see it come back up to test 62 and reject and come back down, then the emphasis is on whatever lows we make, whether they are here at 60 or whether it goes to 59, 50, whatever. The rejection there is going to place a trade, and the sort of emphasis on how low do we go there. That is going to be determined about sort of what's going to happen with Aussie over the next sort of month or 2 months. Should you break those lows, it's going to be in danger, and it's going to sort of be really targeting major lows at maybe mid 50s. That's a potential. And this is all things sort of considered at the moment. But if we see US dollar continue to be sold off, and then you see some sort of reprieve in equity markets, and the world comes to adjust, and because you've got to remember they're in shock factor at the moment. They're in the idea of, oh my God, it's all breaking, it's all coming down, fears out there. These moves are over exaggerated. To be honest, they're over exaggerated. There's no clear definition reason why Aussie should be dropping 5 or 6%, or silver dropping 15%. You know what I mean? Nothing's actually physically changed from the other day to today. Like, yes, there's the tariffs that are coming into effect, but it's an overreaction to the stuff that's come out. And the market's going to see that, and the market's going to go, hold on, wait, what the hell are we doing? And they're going to say, hey, there's opportunity here, and we're going to see a rebalancing. This is how these things work. It's how, the sort of the mental factor of these stuff will play out. Things don't continue. I mean, it's an age-old sort of adage, nothing goes in a straight line. This is a straight line. Things don't go in a straight line. We're going to see some bounce and move back up at some stage. It doesn't mean that the move's over, but it does mean there's going to be opportunity. So we just got to pick where do we want to sort of get in on these things. And look, if we sort of see this open up, maybe look at a test of 60. If we see a rejection of 60, then I would say, look, above 60.60 and then above, say, 61.30, they're the kind of levels where you could look for little potential moves up, sorry. But let's pull this as a little zone here. Little zone here. And a zone there. So that's what you kind of want to see. You want to see, as I said, another sort of attempt for the sellers to go down here and find buyers again, and then overtake this sort of little wick and put a little alert on that and say bounce. These are not hold trades. These are bounce, short, in and out trades. There's a clear sort of difference with them all. All right, so yeah, that's pretty much the look for Aussie. Should we sort of break down and continue down through here? As I said, you just got to let this thing happen. It will find a base, but one little candle is not enough to say that we've found a bottom as of yet. But that's what we're looking for. A failed attempt to go lower, find buyers again, and then take out that first level of sellers. Look to take out 61 and then up to 62. 62 will probably be a sell opportunity. Sell opportunity up around 62 there. All right, let's kick on. We got copper and copper. Look, this is one actually sort of, as I said, some you get right, some you get wrong. This one I very much sort of played this one very well, but we've seen this thing come off nearly 20% since that capitulation the other day. I mean, we're talking back 26th of March. It's the 5th of April now. To lose 20% is just insane. So look, I covered this at the time as well, capitulations and that. So this was a move within 5 minutes, it moved 2.37%. It was very much, if you take all these highs and drag them together, you can see why they had their stops up there. Here's highs, connect the highs, went up there, found stops. That's what they were looking for. You saw that because it moved so quickly. Same sort of thing with Aussie when it dropped down in August. Same thing with gold when it went over 2000, went like $50 in 15 minutes. You see the resulting action afterwards. And I covered this at the time. And this is why at first I was like, look, I'm going to try and buy it at 488. I did. I got a fill. I got out. And I'm like, look, I'm not sure about this. And bang, that's protecting yourself. And that's what I'm saying, that sometimes you get them right, sometimes you get them wrong. And this one would have been great, yes. Shorter from up here, shoulda, coulda, woulda, that kind of thing. But point is that, avoided a big loss. And that in itself, when you add up your numbers at the end of the week, that's a win. All right, so let's clear some of these things up because we know that this has been bouncing at 68. So let's drag up over the high time frame and go top to the bottom here. So we're back at the 61%. That is insane. These things are just crazy moves. Um, as I said, these things, you just don't see price action that moves like this. You know what I mean? This is just sort of like, okay, dribble, 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 and then just absolute free for all coming down here. Um, there'll be a point where these things, as I keep saying, the market goes, hey, are we a little bit over the top here? Have we just kind of done enough? And we're going to see some moves back up. So these are opportunities now. Once they wipe everyone out, once they liquidate everybody, and people are sort of blown out and they've got no finances left, and mentally they're in a corner, rocking back and forth. That's when we'll see a move back up. That's what they try to do. So the whole point is to try and stay liquid. Of course, stay liquid, but stay sort of nimble enough that you could profit on these things. If you didn't catch this move down here, well, hopefully you can catch a bit of the move back up because large moves in one direction, obviously the bounces, it doesn't need to bounce much. Even if it comes to say a 38% move here, still takes you up quite a few hundred points. I mean, in percentage terms, you've got almost a 10% trade, which can still keep this thing in bearish momentum. 38% is very much a retracement where you can tackle the lows and look for continuations to come down lower. Look, even if it goes to 23%, you're looking at a 5% trade. And this is, again, I'm not saying that this is the bottom, but I'm just saying once it does find a bottom, a couple failed attempts down, and it moves back up, these things, because they have been such an incredible move in one direction, it means that the bounce, even if it were to sort of continue down lower, can still offer an amazing opportunity. So you just got to remember to sort of, well, not remember, but hopefully have some powder dry to sort of capitalize on these sort of events. In terms of where we may be going down underneath here, now look, I mean, again, you don't want to be the person that's sort of trying to pick the bottoms and say, hey, here we are. All we can do is look at sort of different levels that we've sort of been using previously, where we've seen sort of support. So basically, we're back. This little period over here is the election period. Through obviously sort of November. So this is a little range we're in before it dropped all the way down. We're coming back along to those sort of supports here. So let's drag this across. That was the range down here. So I would say, look, given all these sort of things, I would say that potentially we may be seeing some bottoms soon. Not necessarily full bottoms, but sort of like sort of bases where it could start to sort of rebalance these things a little bit. A potential trade here, as I said, minimum up to the 23%, because that'll still sort of show a very strong continuation of selling, and potentially you're going to be going lower. But the thing is, I think that sort of that's a pretty good trade, a 5% trade on copper just to get the bounce. I think that'd be a pretty good risk reward. This thing has just wiped a lot of people out. You got to remember. So, you know, the sort of saying that I like, buy their tears. All right, and finally, let's finish off with China because this thing is absolutely all over the shop. We saw this thing explode when we had the sort of board come out the other day with the tariffs. It then obviously subsequently got sold into. It didn't really hold this move over here. They took it up, they took it back down, and then, of course, we had the headlines with China retaliating. This is the area that I said I wanted to sort of see what happened. And obviously, a slight little overshoot, but managed to hold this area here. And then obviously we're seeing this grind back up to the top over here. This is a very tough call at the moment because this is making lower lows, it's making extreme higher highs, and that is all over the shop. Do I think that this is probably going to go back up over here? Probably not. I think that this is probably sort of still going to maintain these kind of previous levels. Let's move this up and let's call it here now, because this is where the sellers were unable to close above, and we look back over here, that's a top little level for us. So it means if we sort of get back above 732, you know, moving up to 736, that's intervention area. That's where the PBOC previously, before all this kind of stuff happened, were trying to hold it. Now, China was always sort of saying that, look, you know, we're not going to artificially manipulate like their currency to sort of combat the tariffs. They've come back, they've whacked back with 34% tariffs themselves. So that means that, you know, that's what they're using as their sort of their tool, their lever to pull to sort of try and combat these tariffs. So it means that most likely you're not going to see a massive devaluation of the yuan and it break above 736. Most likely. I can't, obviously nobody can sort of guarantee anything, but I would say that at first they're going to use that to sort of see if that's going to sort of help stabilize things. And as I said, the two outcomes here are one, that, you know, they reach some sort of level of resolution, whereas they both go, okay, 34 against 34 or whatever, or 36 or whatever China is being imposed with, maybe they go, okay, let's both reduce it back to 10 and call it quits. I mean, that's the end of the day, what America's looking for is what they deem a fair trade. And that means that if you're importing American goods and you're putting a 20% tariff or a 50% tariff on it, they're going to do the same back to you. That's what it is. So we saw this with Vietnam. They had a high tariff against the US. They got slapped with a high tariff because of that. And you saw things like Nike, who have got, I saw thousands of employees over there. I don't really, I don't, NKE or something like this. I don't really cover Nike, but look at this. This thing got absolutely demolished. I'll pull this on a daily here. I mean, everything got demolished, but look at that. You know, we're talking, you know, companies that are worth a lot here. This is just through this week. I mean, everything got sold down, but we lost the internet again? No. Nike lost 35%. That's insane. That's insane. So, yeah, back to where we are in China. So, what they've done is they'll come out and said, hey, look, you know what? We had a high tariff on you. You slapped a high tariff on us. Let's pull it down to zero, and let's sort of work something out. And subsequently, you know, you saw Nike sort of obviously bounced a little bit into close. And Nike's just an example. But the point is that sort of once people sort of reach some sort of resolution that's hopefully somewhat favorable and, you know, for everybody, you could see this thing pull back a little bit here. Because when the tariffs were announced, smashed China. It got sold into afterwards, doing a little bit better. China's going to sort of retaliate with their tariffs, and it gets smacked again. So that's the thing, that's the direction. If the trade war keeps going on, we move this direction. If they have resolution, they come back down this way. This is something that could help Aussie a little bit because Aussie got absolutely demolished. Because Aussie doesn't like people to rock the boat. It's a risk asset. You know, the whole world's falling apart. Nike, 35%, you know, trillions of dollars wiped off the equity markets. These kind of things Aussie doesn't like, and Aussie subsequently got absolutely demolished. Just one quick one here. We have a look at sort of, yes, this thing. This is another chart that I put up. I don't cover this on these daily or weekly charts, but this is the one I said, the 38% coming down here, price target. This thing got absolutely demolished as well. But as you can see, you know, if this were to be a bit of a channel, it's overshot it. If this is your horizontal, it's overshot it. There's a level, when these things move in such strong, hard directions, there's a level of reasoning behind it, but then there's an extended period of just no reason. It's just, people are just, you know, either they're getting their stops hit, they're just losing their mind, they're not thinking rationally, and moves can go overextended. Gold, perfect example of this coming up outside this range over here. Everyone's like, oh, tariffs are coming, tariffs are coming, tariffs are coming, and it shoots and overshoots this area here. The correction can be quite devastating should these things snap back. And this is what I'm saying, sort of like if you look at sort of ES here, I mean, China, I mean, the yuan hasn't really sort of done this at this point. But what I'm saying is that there's a level of which it's overshoots what is a reasonable extent of these moves. 15% in silver is probably not reasonable. 6% in one day in Aussie is not reasonable. And this is the thing. Once that sort of like people sort of take a breath and sort of re-grasp things, that's when we can see opportunity to really sort of capitalize on these things. Because, you know, should everything correct, and this is, you know, all things considered, I don't think it's going to fix itself overnight, but should things sort of correct, these are going to be potential multi-year lows, multi-year highs. Like these moves are just, I can't even find the words for it, but yeah, they're crazy. That's what they are. So anyway, look, getting back to the actual chart and what we can do with it, this thing bounced back up. It sort of grinded into the close of the week. Above 732, we look at 736. Below 724, we look at main supports. Headlines are the thing that's going to move this. If we see something sort of about sort of chilling out, we're going to see a move down. If we see some sort of clap back and America goes, hey, we said don't put any tariffs on us, which is a stupid stance for them to take, but, you know, I think reasons out the window this week. You'll see this thing continue to move up here. Aussie will move down into the 50s, so on and so on. Whew. So yeah, look, that's an insane sort of week, and that's why I said, you know, we're already in an hour of this thing. I haven't even talked about NFP, which really took a backseat to it all. So I'll quickly go through the data. We had ADP throughout the week. As I said, ADP is kind of not really a good tell for what's going to be happening with NFP, but both of them beat this week. So, and quite substantially. Like you can see, ADP Wednesday was 118 expected, moved to 155. NFP last night, 228. That is a big number, particularly seeing last month revised down to 117, expected 137. If we have a quick look at the sort of more recent months, it's been in a downward trajectory, and then out of nowhere, bang, sort of apparently they're all hiring again. So that was a big beat. And this is potentially a headline, I think that's a bit of data. Look, you know, I joke about it being the Fed PBOC or PB Fed OC kind of thing, just because you can't trust China's data, but you can't really trust the Fed's data either. Because, you know, these things come out of nowhere. Remember we had the big 800,000 job correction last year? Oh yeah, sorry. It turns out we got all the numbers wrong for the last 6 months and that, and let's just clear it all up in one go. There's actually 800,000 jobs less than we reported. You know what I mean? But the thing is, this is what the market is presented with, and this is what we trade off. And if you look at DXY, it moved off the lows. That little bit of data coming out there, which is around this period here, it was selling back. So that was that little consolidation period that I thought we were going to see. And then the data comes out and wow, it moves back up a little bit higher, closed near the highs. You got to expect this probably to have a little bit of flow left in it, but then we can see this sort of get back to business and correct a little bit. So yeah, that was a interesting bit of data in that to sort of close off the week with. Obviously, unemployment rate up a little bit. That's not positive for the US dollar anyway, for US strength. Coming into this next week, where we at? So April. Yep. So coming this week, so we got daylight savings. It's changing tomorrow. For Aussie. So I think we got an extra hour. That's something to keep in mind. That means that, up earlier throughout the week. It means sort of London sessions opening an hour earlier. Obviously, US sessions opening an hour earlier for local time anyway. Not really much sort of data to speak of, and that's through the Monday. Tuesday, just a bit of confidence and all this kind of thing. I think this will get shattered this week. I mean, depends how close to this period they report these numbers, but I imagine these will get hit this week. That'll be a downside move for Aussie should this come. We got New Zealand cutting their sort of cash rate by 0.25%, base point, sorry. Well, not percent, but yeah, basis point. Moving forward. UATA speaking, yen is certainly something like I haven't traded yen, but I've been saying it sort of like for the last month or so that thing is coming back, and particularly while US dollar and if gold comes off, people are looking for safe havens. You're going to see JPY continue to strengthen, and CHF I never trade, I don't even chart it, but that's another place that people like to park their money, particularly when US dollar is not an option, and if gold continues to come off and the equity markets come off, that's when we're going to see yen continue to strengthen. And geez, if they raise their rates on top of that, watch out, mate. Watch out. So we've got Bullock speaking on Thursday, and then we got US CPI expected to come down. Look, I mean, typically CPI coming down is going to be sort of a bit of a weakening event, but everything's sort of happening recently. We'll sort of see what happens. Certainly, if this ticks up, that's a tick in sort of strength camp for US dollar. If it comes in line with this or lower, then we're going to see US dollar sell off a little bit there, and that's maybe what could be giving us a bit of a bounce in a couple of these products, and that as they sell off the US dollar. And then PPI into the end of the week, looking to actually tick up. So, I mean, that's obviously the producer side of the index and that. So that's something to keep in mind because, we're seeing CPI come down, but PPI going up. So that's a little mismatch on these kind of bits of data. But anyway, an insane week. I don't think it's done yet. I'm going to be looking for some opportunities for these bounces, but certainly going to be sort of in and out trades. All right, that's it from me.